I suppose we can go ahead and get started with some introductions. If you'd like
Absolutely.
to introduce yourself, the team, and give a little bit of an overview of what overnight finance is, then we can dive into more of the nitty gritty of things.
Yeah. Yeah. So I'm Maxim Ermilov. I'm the founder of USD Plus. Here with me you have Abdul, who pretends his name is Fancy's Dude, and then Andrei, our CMO. So yeah, maybe share a little bit of my background. I've been told I should kind of tell people more about my background. Uh, um, but yeah, I'm a traditional kind of finance person. I started with JP Morgan in bond trading in London, like emerging markets bond trading a long time ago. Then I spent 17 years with the Boston Consulting Group. I led financial institutions practice for them in ex-USSR. In 2008, I actually left BCG for 1 year to lead and then returned actually to lead subprime mortgage business for Morgan Stanley, again in ex-USSR. That was a lot of fun. And then I got bored and I left, and I ran a fintech lab for one of the banks as the CEO. Then I went to Stanford, and after Stanford I only wanted to kind of make my own kind of innovative businesses. So I started this company called Mac49 Vostok in Eastern Europe. It was franchise of Mac49 out of Silicon Valley, and it was building kind of startups for large corporations. We sold it 1.5 years ago, and then I started thinking about what to do next. And roughly like a year ago, I had this idea of launching overnight finance. And then by August last year, I gathered two of my co-founders, and we started working. Roughly, I think September we started working a little bit. October we like really started working, and then December we understood we would raise. We closed the round, pre-seed round in January, and here we are. So with USD Plus actually, doing really well after. Actually, it seems to be like the product designed for the crypto winter. So a few ideas which went into USD Plus. I'm sorry I keep using all this like kind of traditional finance analogies, but I just kind of find it useful to think in traditional risk return terms, even in DeFi, even like in crypto, because it's just still an asset. It has risk return profile, and actually I find more similarities in DeFi with traditional finance than people tend to believe. But basically, what I was first did a couple of projects in crypto space back in 2017, and so that's how I got to know kind of the space, and I was kind of investing, yield farming a little bit here and there. And then I noticed that I was spending like so much time doing the research, so much time trying to figure out the new projects, so much time dealing with the interface. I mean, it was really not worth my time, to be fully honest, because I was just thinking, just so much hard work for meaningful APR. But honestly, because I was not prepared to put like millions and billions into that, I thought I was really kind of spending too much time for the return I was getting. And so I thought, why can't somebody kind of come up with something similar to a money market fund or like a savings account? I think that's very similar concepts. Like something which in traditional finance is like huge asset class, like 5.2 trillion asset class in US alone. And that is actually a very simple asset class. It never goes down. It always kind of, you never lose money with that. You never break the buck, they call it. Whenever you have spare cash, you just buy a money market fund, Vanguards or Fidelities or something like that. You stick your cash over there. You never lose. It's very little yield. It's some yield, very little, but you never lose. And whenever you need cash, you kind of on the spot you can get it. And SEC kind of mandates money market funds actually to follow so-called NAV of one policy, net asset value of one. So every unit of the money market fund should always be $1. And so the way they achieve it is they kind of tell you where you can invest, and also like US treasuries, like 30-day treasuries, 7-day treasuries, like 2-week repos, like something extremely liquid and something so short term that it never kind of goes below par. And so they give you this kind of obligation to invest there and restriction. But whenever you generate profit, you got to pay it back on the same day. So if by the end of the day you've generated profit, you got to pay it back to the holders of the units. And it occurred to me that the money market fund, like the SEC, essentially invented stablecoin, because like really literally they mandate this unit to be always $1. That's like their regulation. A funny thing is that you know there is this jargon in the traditional finance saying breaking the buck, so kind of breaking the dollar. That's when the unit of the money market fund depegs. It's actually like literally they name DPEG in traditional finance. They call it breaking the buck, so breaking $1. I found that so amusing that actually they kind of fighting against stable coins, but when they have kind of also invented the stable coins, but they just don't know what they invented. They call them money market. So I thought it was like insightful, and that's what we decided to build, kind of stable coin which generates yield and pays it to you each day via rebase. So and that's what USD Plus is at the moment. And so the way we maintain the pack is that you know, USD Plus is 100% collateralized, so one USD Plus always has $1 worth of assets behind it. These assets are made of USDC, USDT DAI. At the moment, no DAI, but USDC, USDT DAI. Typically, we do not yet accept any other stable coins, and you know, most of the stable coins other stable coins don't pass our due diligence. So that's what we. Then this USDC, USDT DAI is deployed into yield generating strategies across DeFi space. And so the profit which is generated essentially through yield farming by USD Plus is passed over back to you via rebase when, you know, once a day when that happens. And so the strategies which I employed are extremely safe. So like it's not risk free because life is not without risks, but it's safe. It's like the lowest possible risk. So it's lending, things like Aave, you know, you could make deposits essentially lending mesh swap until recently. We had tried Impermax, we don't like Impermax for several reasons, which I don't want to, maybe too technical to, but we tried that before. And also we do a lot of stable to stable pools, like USDC to USDT, USDC DAI, so things with no impermanent loss, or like at least with minimum impermanent loss. So yeah, that's and so that's how we have assembled the collateral, and whenever it produces some yield, we pay it back to you. Yeah, and so then USD Plus has a lot of interesting use cases, because when I was kind of inventing it, I thought it's kind of a cool way to, you know, simplify yield farming for people, kind of streamline the interface, take over the research. So I thought, you know, kind of the major use case would be, you know, you have your stable coins, you just put it into USD Plus, and whenever you need your cash back, you just, you know, withdraw it. So that was my kind of original idea. But then as we learned more about DeFi space, we realized the whole fantastic use cases which were opening up with USD Plus. In particular, because it's on one hand, it's yield generating, but on the other hand, it's a stable. So you can actually put it in pools. So because it's a stable coin, it can be in the pool against USDC. It can be in the pool against ETH, Matic. It can be in a pool against any other token. And one thing which we discovered was, you know, that's fantastic for distribution. Like if you see on Dystopia at the moment, you know, yields are great because, you know, you get double yields Dystopia with USD Plus. You get the yields from the pool and kind of Dystopia rewards, but then in addition you get USD Plus yield. So you guys, if you check out the new interface, which is where since today it shows you that like USDC USD Plus pair will be yielding like 17.3%, out of which 7% is the yield by USD plus, and the rest is the rewards by Dystopia. And like once you see it, you realize this is like double benefit for you and like the most profitable pool there is. It also generates yield in Penrose, so you can kind of stick it into your LP token from Dystopia into Penrose. At the moment it's 55% written on their website. In reality it's 55 plus 7, which is the yield for today, adjusted for the proportion of USD plus. So it's like became like this double and triple rewards when you use USD plus in those pools and farm those pools. Then another thing which you guys actually kind of, and that's why I was just so happy to come here and talk to you guys. Like one thing you discovered, it's actually, we didn't realize that until people kind of came up with this idea, is that USD plus is an appreciating asset. So it's growing in the pool. So a lot of people kind of, in particular mid-sized projects, would provide their own liquidity. Like they would issue a token and would maintain liquidity on QuickSwap or somewhere else, their token against their own liquidity. And so when the market was booming, everybody wanted to pair their token against, ETH Matic because those were growing. And when they're growing, kind of the value of your other tokens is also growing. That's the way how pools work. So like the left right of the pool is always equal in value to the right part of the pool. So if the right part has been growing, then the left is also automatically growing in value. Now with crypto winter and UST, ETH and Matic have been volatile and most importantly falling. And so that's dragging down the left part, which is the token of these mid-sized projects, where there is not much trading. And so a lot of people started switching to USDC because they wanted to be paired against something stable, like USDC or like Auto Finance has switched to MAI, Tetu switched to USDC, and some others. But then you realize that if you do that, you can actually, pair against USD plus. It has double benefit. If you provide your own liquidity for your own pool, in the past, your right-hand side of your pool didn't work. You paid against USDC, but that was like dead money. It would not be producing yield. You replace it with USD plus, and suddenly your money is working. So it's producing yield in the pool for you. And second, people also realize that the second benefit is that because of the way how pools work, if you are paired against an appreciating asset like USD plus, it is, creating appreciation pressure on your own token. So if USD plus, grows by 1% and there is no trading in your pool, your token also grows by 1%. It grows by 10, after a year, your token has also grown by 10%. So your money works and also your token, your native token is appreciating. So this is something actually Sphere realized, and they came up with this video and this idea. This still has not been implemented. Sphere USD plus pool. I think it's coming very soon. But this has generated so much enthusiasm from various projects, including you guys, that it was just amazing. That this use case got discovered. So these are like things we discovered as we went. That like at the beginning, a very simple idea how to simplify yield farming and spend less time on doing something, with less risk, has become into what I believe is the new type of stablecoin, which is very suitable for the crypto winter. Sorry for this long speech and intro, but yeah,
It's all good. It's all good. It's a lot of cool stuff to hear about for sure. It's, essentially USD plus is just yield farming as a service. Is that a pretty accurate statement?
Well, at the beginning, that was like the idea that it will be yield farming as a service, but then we realized that this yield farming as a service, because it's packaged as a stablecoin, has so many applications. Like I said, like LP in other pools, helping you kind of grow the value of the tokens in the pools you provide, kind of increasing capital efficiency of your capital, kind of immobilized in the liquidity pools. Another use case which I haven't told you about is that actually Plus has the ideal form for leverage. Leverage, I hope, is coming with pre-owned. Simsal and I were just discussing actually this call, launching pre-owned and how we can leverage USD Plus via pre-owned. But typically when you leverage an asset, like you take ETH or Matic, you put it in ChiDAO, for example, or in Aave, you are afraid of the risk. Like you're really afraid of the risk because your asset is volatile. If it falls under a certain threshold, you get liquidated. You must be always kind of making sure you have enough buffer. So that's why you cannot leverage much. But with USD Plus, because it's a stable coin, the risk of liquidation is minimal. USD Plus has to depeg, and I'm ready to have a discussion why it's very unlikely that it depegs. Because it's a stable coin, when you leverage it, it's stable. So your leverage ratio is stable. So the risk of liquidation is next to minimum, next to non-existent. So it actually simplifies your borrowing, like getting leverage against this, like many times. And so what that allows you to do is to leverage USD Plus many more times, so get like much higher percentage of loans against it, like to make sure that you really get like the gen type of yields. So again, farming as a service, yes, but it's just so much more than that, and it was a surprise how much more that is doing.
Gotcha.
Real quick, so what kind of yields are you guys able to get up to?
So everything is super transparent on our side. So today it was 11.3%. Typically, it fluctuates in the range of 8 to 12, but we had situations where we were above 12 significantly and where we below 12 significantly. So far, we've never had a day with a loss. So we never had a negative rebase. That is possible. That cannot be excluded, but we are working very hard to make sure there is never negative. But yeah, so this is like the way we think about this is that it's liquidity first. So whenever somebody comes and wants to get USDC, like has USD Plus and wants to get the USDC back, no matter what amount, you click one button, you get it, like immediately. So that's really the thing. That's really the most important thing. You click one button, click, and you get your USDC. And we have all these smart contracts that on your click will retrieve the money from various investment strategies, convert them into USDC, and give it back to you. And so, like we had of this weekend, we had somebody put in 300,000 on Saturday and withdraw this 300,000 back on Sunday, and it all went smoothly while I was asleep. So I mean that's how it works. So liquidity number one. Second, we think about risk. So I need to make sure there is no today with the I cannot break the buck in SEC terms. So we should always generate at least zero. So if you ask me what I'm worried about not about maximizing your yield. I'm worried about making sure there are no losses. Everything is preserved. And so that's why we have the lowest possible risk appetite in the whole of crypto. Like the most conservative investments only. And only then we think about the APY. That's why it's relatively low. But the way I think about it is that USD Plus is useful in situations where your money doesn't work. Like if you create a pool and you provide liquidity to a pool, and you immobilize there your own, that USDC is yielding you zero. So if it can start yielding you 5%, 6%, 7%, 8% APY per year, that's a lot. Not because this number is big, but because it's a small number, obviously. But it's infinitely more than zero. It's infinitely, more lucrative and capital efficient than getting zero out on the in that pool. So these are the ideal situations for like where your money is not working, but then you replace USDC with USD Plus, and suddenly, you get infinitely more than zero.
Gotcha. Yeah, what kind of exactly are the strategies that you use to grow the USDC that's backing USD Plus? And then what are the risks associated with those strategies?
Yeah, so I mean, we disclose everything, so you can see kind of all of our strategies. There is stats dashboard in the DApp, and that's like live data. So we track all of that in real time. And that can be actually, cross-referenced to our on-chain contracts, so you can. It's hard to read, but you can see that it's really deployed over there. But as I said, it's lending, so at the moment it's Aave. A little bit of money goes to Tattoo, but lending is typically our lowest APY strategies. Why they are good is because typically there is no cost of investing into those strategies and exiting those strategies. So we typically use Aave as a so-called cash strategy. There is like, between 0 and 5% of portfolio which is dedicated to Aave. And so when you kind of put in USDC, it goes straight to Aave. When you want to withdraw a small amount, it's being withdrawn from Aave. Other strategies don't get touched. But that way we kind of minimize the mint redeem costs associated with this, and that's actually very, very interesting. So when you want to mint more or we want to withdraw more than there is currently in the Aave contract, USD Plus will invest or withdraw from stable to stable pool strategies. So we are a big liquidity provider on Uniswap 3 via Arrakis. Until the end of June, that's going to be run a very lucrative liquidity mining program jointly with Polygon. So we do it via Arrakis. USDT strategy is the one we farm over there. We like Dodo. Dodo exchange actually has a very, very nice also kind of reward program, and we like their Dodo USDC vault there quite a lot. In the past, we farmed Mesh when Mesh launched, then became very unattractive, and actually we didn't farm the liquidity pools. We farmed the deposit program, so like where you could lend them money and lend them USDC. So that's what we did. So now Mesh is stabilizing. We might consider actually putting some USDT pairs over there, maybe USDC DAI as well. And of course, there is a huge chunk of our assets going to Dystopia at the moment. So USDT pool on Dystopia, and so we are looking actually for Penrose to kind of stabilize and get out of the waiting period, so that this USDT and USDC DAI LP tokens can be restaked to Penrose for even further yield. So we'll see how that works out. These are the strategies. So again, as I said, this is the lowest possible risk that exists in DeFi. So it's lending USDC, but also USDC, USDT, USDC DAI liquidity mining.
Gotcha. And then I guess kind of like, let's say if you guys were to expand like massively and you had say 100 million or 200 million dollars in TVL, would your APY decrease because of that? Because essentially you'd be almost competing with yourself on these different lending platforms, because you have such a massive amount of money to kind of try to generate a yield off of. And I think that
that's going to be a nice problem to have. I have to
yeah.
But if that happens, actually, that will mean that the yields across the entire polygon go down. So the entire, because in a sense you can think of us as creating money, like not printing money like UST, but like creating collateralized, fully backed, 100% collateralized, liquid money. And so that would mean that if we stay within Polygon and we have a lot of ideas how to go beyond Polygon, that would mean that indeed the market yields on Polygon have gone down, and that's unpleasant from the kind of humanity perspective, but our goal here is first of all capital preservation, and second like liquidity, and then we as I said, we are not supposed to give you large yield. We give you the market average yield. So if the entire market goes down, then what can we do? Again, if we generate, even 5% APY, 12 or like 11.3 like we had today, if at some point we just move to 5, again, USD Plus will be infinitely more lucrative in situations where you are getting nothing. So where you're getting 0, even 5% is infinitely more than 0. So that's why we kind of believe that's fine. One limitation, which I believe we will never be able, will always be, a room for us to grow, is we are a rebase token, so we pay you yield via rebase. And rebase tokens are limited in applications. In particular, Uniswap v3 does not allow for rebase tokens. It just doesn't deal with it. And what that means is that there will always be a huge part of the market, in particular Uniswap v3, where we don't trade, but where we farm. So there will always be USDC, USDT DAI. There will always be pools of that nature where we'll be able to deploy our capital and see what that is generating. So that's actually important for us to know and learn and have the competence from Uni v3.
Gotcha. Yeah, that makes sense. Got one more question, then I'll stop hogging the stage and I'll let Chris ask some questions. But you mentioned that you guys currently are collateralized by USDC and USDT, but not yet DAI. What's kind of your plan to incorporate DAI? And then are you collateralized 1-to-1 or is it over collateralized? And then also, why, I guess, USDT kind of has a lot of drama around it as they're not like super transparent, and it's pretty well-believed rumor that they're not actually backed 1-to-1 like they say they are. Is that something that you're kind of taking in consideration?
Yeah, actually, these are very smart and very good questions. Thank you for that. So first of all, DAI, it has passed our due diligence, so we're comfortable with DAI 100%. It just liquidity for DAI is not very present, and the returns on USDC DAI pair are still kind of so. So it's not there because of the because we don't want DAI, we want DAI, but it's just not as lucrative as some other strategies which we are deploying. Okay. As we grow, we'll have no choice but to kind of farm more DAI. And we are like typically we at any point in time we're testing about 25 strategies across Polygon, but only like 4, 5, 6, 7, no more than 8 make it into our portfolio. So for technical reasons, but we are tracking 25 because what we found is that you can't trust the information on the websites, and we always need kind of to be running a strategy, see how much it's performing in reality before we make the decision to invest. So we're tracking a lot of DAI strategies, just don't find them, the risk return profile to be acceptable for us. But it will change. Now you ask about USDT. Indeed, there are all these concerns about and like why they're not disclosing and stuff like that. But what I always say is that's of course a concern for us. But somebody came to them during USD crisis that here is 10 billion USDT. Please give us 10 billion cash, and those guys paid 10 billion cash on the spot. So to me, that's like a test. I mean, the press would say, "Oh, 10 billion, flew out of USDT," but they just gave on the spot 10 billion. That means they had 10 billion in very liquid asset. They didn't delay, they didn't wait, they didn't say like, we got to wait for 1 month until we collect cash or something. Fully liquid 10 billion on the spot. That's very impressive. And they didn't blink. They knew that whatever run on them is coming, they had the money. So maybe what I think is that why they're not disclosing, I have no insider knowledge about this, but I think why they're not disclosing is because they probably deployed that capital in a slightly more risky way than a traditional bank should. So they're probably kind of investing into longer treasuries and probably some duration risk, just to get a little bit more money. But like they didn't blink on the 10 billion, they just gave it away right away. It was quite incredible. It was extremely incredible. So that's why I'm kind of not bullish on them. USDC is high quality stable by far. GUSD, BUSD, so Binance USD, high quality stable. True USD, high quality stable. But USDT is still the largest. And important to realize that, everyone says, USDT is another. Well, think about it. USD had zero collateral, zero. It had nothing to back itself up with, nothing, zero, nada. And these guys are infinitely better. I mean, they had 10 billion and just gave it away in exchange. So infinitely better collateralized than UST. So I think I'm totally okay with USDT at this point in time. Now, where I'm not okay with USDT is that because of all these rumors, it's more volatile than USDC. So there is when UST was happening, I actually was very nervous. We didn't have any exposure to algorithmics, and we never will have an exposure to algorithmics. It's just not what we do. It never passes our risk criteria. But at some point in time, people started getting crazy. USDT is going to depeg, and there was a moment when it started depegging, and I could tell you that at that point in time, I was afraid we're going to end up the day with a loss, because people got so shaky, and there was 2 hours during which I thought, if we had to mark to market at that time, so do the rebase at that point in time, we would have had a loss. But then it came back and everything worked out just fine. But because of that, it's actually USDT more risky, because everybody can freak out about them. It can start getting volatile. It can kind of inflict losses on us. So what we are doing with that is, on our website, we announced that soon we're going to have so-called hedged strategies. And the hedge strategy is going to be the following. So take your USDT, we're going to put that into Aave, and instead of buying USDT, we're going to borrow it. And so when we put money into USDC pool, it's going to be USDC which we receive, which is managed by USD Plus, and USDT which is borrowed by USD Plus against USDC. And so what will happen is that when USDT starts fluctuating, so for example, it goes to 99 or 98, we will not be afraid, because for every USDT in the pool, we will owe 1 USDT to Aave. And so when the asset goes down, the liability will go down, so the debt will go down, it will net out effect. And when USDT goes up, the loan also goes up, so it will be fully hedged exposure to USDT. And the same we will do with DAI. And so this way, we will pay a little bit of yield for that, but we will improve the liquidity and risk return profile. Not infinitely, but very seriously improve the profile of those strategies. And so with this, my dream is to run actually 0 to USDT by using this hedge strategies. But let's see.
Gotcha. Yeah, I actually didn't hear about the people cashing out 10 billion of USDT. If you look at the market cap chart of it on CoinMarketCap, is that kind of what that big dip is not too long ago?
Yeah, I'm not sure what the market cap, but around the 9th of May, 9th and 10th of May.
Yeah, that's about when it was.
When UST was depegging, that's when USDT started also depegging. And that was horrible. I was very scared. Much more scared than with the UST.
Gotcha. Interesting. Yeah, I actually didn't hear about that. That makes me feel a little bit more comfortable about USDT.
Yeah. Yeah, but this 10 billion, to me, this is the test. Somebody should come to them and ask for 50 billion. Then
Yeah.
it will be bigger.
Chris, you got any questions for him?
Yeah, yeah. So I was gonna ask, so kind of going back to Zach's earlier question about, what would happen if the yield started going down just because your supply went up past, past what people were borrowing or past what, you're able to actually put into these farms. Um, what do you guys have other investments kind of lined up that you're like, okay, outside of yield farms, this is what we'll, we have a possibility of expanding to? Because I know you guys are trying to stay within, a lower risk
Oh,
profile.
yeah, we are tracking all the yield farms. As I said, we are tracking a lot of yield farms, and we are always for the new yield farms appearing. And we have it's big part of our business, always knowing where opportunities are, where the yield is, and whether that yield actually is low risk, and whether it meets our liquidity requirements. So, yeah, I mean it's, and then what is important is typically when a project launches maximum. So Penrose at the moment, USDC USD plus pool, you stick it in there, it's like 55%. Our USDC USDT pool there, which fits our criteria, is like 60%. But we're still not putting it into Penrose because for two reasons. Why? First, we need to test those strategies and see what return profile they're producing. So what we saw, for example, that Penrose forgot to announce about the waiting period. So actually during the first week, your rewards get accumulated and will be paid out to you later. So had we invested too early, we would be enjoying zero yield at the moment. So we found that out. But also we have a special team, which is like we never rely on the audits. So at the moment, my guys are going to the Penrose code to make sure. I mean, I'm sure everything is fine over there because Simsala pays a lot of attention to himself. So I mean, that's cool stuff. But just out of discipline, we must go through that code. We must make sure the code, from our perspective, is safe and it can be used for our purposes. So once that is done, we'll start. But yeah, we always good opportunities for good work program as well, and also very careful about the new opportunities.
Gotcha. Okay. I'd be curious to see what happens if your guys' supply, or I should say, the amount of liquidity you guys have increases drastically, and the effect that would have. I mean, it would take a massive amount of money, but I'm curious to see what might happen at that point. The other thing I kind of wanted to bring up is, are you guys targeting, both in your marketing and in just, the project and your vision of it? Are you targeting more the independent investor coming in, or are you thinking more about the pairings with projects?
It's kind of both. But what I find, so there are different types of investors. There is so-called speculative capital, like people who would jump on you for the yield, like at some point, like this 300,000, which came on Saturday and left us on Sunday. That's like really, that was the biggest action. So what those guys did, they saw Penrose mistakenly put the yield of 2,000%, 2,000 APY on their website. So immediately they mobilized 300,000, minted 300,000 worth of USD plus, had another 300,000 USDC put into LP on Dystopia, so 600 total. Then they put it into Penrose. Then they realized there was this whale production over there for 1 week, and so that the yields, like the money would not be producing this 1,000%, nothing to kind of dump quickly. And so that money like left right away and went all the way back to USD plus. So that's not the type of investors.
Uh-huh.
But
Immediately dips.
yeah, but investors who kind of really like retail investors, I don't want to say small, but like regular investors who have some stables, and like it just doesn't make sense for them to farm very aggressively and very like the case I just described, who just want to have yield without too much trouble. Like our ideal user just has some cash and doesn't think about where to park it. They just park it into USD Plus. So that's like the ideal scenario, and then they can use USD Plus even without redeeming. Plus trades everywhere. It's commonly accepted by everybody. Like you don't tell me transfer me USDC. You just say transfer me a few dollars, USDC, USD Plus, USDT, DAI. I don't care. So we want to be in that league. And we do like projects a lot. I mean, because there it's like, as I said, it's not speculation. It's it was not originally part of the vision, but it is part of the vision. Because it's really, I didn't realize it was such a pain. When I went into DeFi, I thought all the liquidity on the DEX is like market liquidity. So somebody issued the token, and there are like people who buy it. I didn't realize that there was so much capital. Like a game, AutoClam switched to USD Plus, and because the game is designed such that you need to mint clam, like you need clam to play, and sometimes your rewards get in clam, and you need to have some liquidity for that. They must maintain like I forgot 550,000 of USDC of my and 550,000 of clam in a DEX, and that's like dead money for them. And I thought that it's really a situation where we create true utility, like because you're not speculating. It's like we are making your capital efficient, and there is like real usefulness to our product. Like again, with the retail investors, it's not speculation; it's true usefulness, because it's like you have cash, you don't want to waste your time like managing it and researching. You just want to be sure, just like shoot and forget. You're just sure that your goals are accomplished, and so it's true utility for the small investor, mid-sized investor. It's true utility for projects like yours, and that's why I'm actually so excited to be here. And trust me, it's of course it's easy to like, not easy, but like the world of big money, like where you have like move billions around is fascinating. Maybe not, but it's fascinating to some people. But like it's a very, very different feeling when you do something which is really useful. It's infinitely more satisfying. It's just like we have built something which people like. I mean, to me, it matters more than somebody who put in 300,000 and used it.
Yeah, I do like the take you're kind of bringing, in. And recently we've seen a couple more projects kind of going about the right, bringing the conventional world into crypto and trying to mesh them together. So I do like the fact that you're kind of taking some of those positive things, like no one loves to run up 100x and then go down to 200x. So I like the fact that you guys are focusing on that stability.
Exactly. Yes.
Yeah, I have a hypothetical scenario that I'd be curious to see kind of what would happen. So let's say you guys have $10 million of total value locked, and maybe USDT depegs. Everybody's scared that all the stable coins are going to depeg, and let's say half of your guys is 10 million, so $5 million. People want to transfer that out and get their USDC back. Is all of your funds kind of invested into these different strategies generating a yield, or like I guess how much is set aside for immediate liquidity, or can somebody just pull out half of the supply at once? I guess I'm trying to.
So roughly 5% is allocated to Aave, and there you can just on the spot.
Okay.
The rest is allocated to strategies, which able to stable strategies where you need to withdraw, and there are some. With withdrawing, but that is why, as I explained, we are moving toward these hedge strategies. Because if I borrow USDT before investing it into a liquidity pool, and USDT starts depegging, I'm not afraid, because what I own, I owe, and that's why I'm hedged. USDT goes to zero, my debt goes. So P&L doesn't change. So that is why I'm extremely if something like this happens now, but we are not yet like at millions and millions size, so that's not yet the problem we have. But like if we're at 100 million, for example, and people start withdrawing like 50 million, then we would have huge loss at that point in time. But if we are using the hedge strategies, which we are kind of building at the moment, testing, and which are about to materialize, then it would be just very easy. We get your money and we would have no losses. We would be able to give you and with zero loss. At the moment, again, as I said, had we been 100 million, 50, or maybe like even 20, that would be a problem because just liquidity on the Polygon does not allow too much for that.
Gotcha. Yeah, that makes sense. Then another question I had is, what are kind of the regulations around creating a stablecoin, and especially a yield-bearing stablecoin? Because I know if you say that your asset generates a yield or a dividend for everybody, then that could fall under the securities regulations.
Yeah. So I recently wrote an article, actually, for NASDAQ republished it, about the regulation. So at the moment, the most advanced regulation has been drafted, not yet by and regulators like to copy paste from each other, in particular kind of sophisticated regulators, like a US regulator would never confirm, but they would be very open to copy pasting some of the good regulation. And in the European Union, the regulation is really, really good in which they. And so actually more than half of that regulation was, and they differentiate between two types. One is stable coins linked to official currency of a state. And in particular, USDT would kind of fall under that definition. And basically what they will do, they will treat stable coins as so-called electronic money. People would need to get licenses, like for example, USDC, like Circle got a banking license, and they would need to comply with the banking regulation in AML, but also in terms of kind of observing reserve requirements, so kind of asset liability ratios would need to be kind of observed in that situation. And that's why Circle got the bank. And those stable coins, essentially e-money, will not, interest is prohibited, and that is essentially treated like as I said, as electronic money, and not a security, but like almost like a legal tender. And to do that, one will have to be licensed by a bank. But then second type of stable coins, which they foresee, are stable coins which are referencing a basket of assets, so-called asset reference stable coins. So, for example, DAI would be like that. USD Plus would be like that too, because we're not referencing US dollar. Actually, a very important nuance is that we are pegged to USDC, not to the dollar. That's actually a very, very important differentiation. We're not pegged to the US dollar. We are pegged to USDC. And we are backed up. So there, the regulation requires that you disclose assets, and essentially what you need to do, you need to be 100% backed. So it's actually very good for us, because that regulation, once accepted, we'll make sure that we are fully backed. DAI is fully backed, MAI is fully backed, and there's very easy regulatory regime. You just disclose some information to the regulator, like a white paper, but that's about it. You don't need a banking license or nothing like that. And so the guys who will feel bad from that regulation are all stable coins, because they have liabilities in terms of stable coins issued, but no assets to back it up. So they will have a lot of trouble complying with that regulation. But USD Plus is to be compliant, and it is allowed. It will be prohibited to pay interest on USD Plus, but it is okay to pay yield, because yield is not a promise of the return. It's just like how much we generate, we just pass it, a certain percentage. At the moment it's 10% of the yield. We pass all to the holders, but that's it. So from the regulatory perspective, it's actually going to be just fine. We actually, we believe we will win a lot from that regulation, because we're built to be compliant. We're built like a money market fund.
Interesting. Yeah, I haven't done a ton of research on stablecoin regulation in particular, so it's cool to hear.
Yeah, I mean, it's coming, and I mean, I had to do it because when we were raising money, we got asked the question a lot. So I thought I need to invest some time into
Yeah. Yeah,
Yeah, not being prepared for regulation definitely isn't a good thing.
Yeah. Well, we believe, actually, honestly, had this regulation and this research I did in November last year. And I was recently interviewed about this. And actually, if you are interested, there is a very interesting AMA session 1inch has invited me to, and it will be a battle between Circle USDC guys, head product of Circle will be there, and myself, and so we're kind of debating, the future of stablecoins and regulation, and following the USD. I think it's on Friday, more or less this time. So, and there will be an announcement in our Discord. I honestly kind of made the point that European Union, essentially all civilized world, already had the regulation drafted, which would have prevented the USD crash. Had this regulation been in place, USDC, USDT, DAI would prosper, USD Plus would prosper, twice as much. And the disaster of USD could have been prevented. So they had the draft, it was perfect draft. People who drafted that regulation, for a change, understood crypto, because usually with regulators, they just... But here they understood crypto, they came up with really smart solutions, which would have solved for risks which materialized, which would have saved people from wasting $50 of market cap and Luna. How come that was not in place? I think that regulation would have been fantastic for the industry, but I have a question to the regulator of how come it's taken them so long to put it in place and kind of keep the situation so vague as it is.
Gotcha. Yeah, that event on Friday sounds like it could be super interesting to hear about. We can move on to some audience questions now. It looks like we answered a lot of them already. There's one from Benova. He asks, token holders are needed to keep the project running. My question is, do token holders have the right to participate in project management? And can they vote on the good and bad decisions of the project? So I guess, are there any governance aspects to overnight finance?
Yeah, we were going kind of to go the ICO idea about the time, but because of the bear market, I don't know when that is going to happen. We're well funded and reliable and stable at this stage, from the financial perspective. But what I see is that it's not good time to issue our governance token. When we issue, it's actually very important to get the governance right, because we must make sure that the governance stimulates extremely low risk appetite. So the governance should kind of stimulate for thinking about liquidity, about risk, not thinking about APY. Because if I let the community vote strategies, everybody will go 1,000 APY, and USD Plus will start to exist like. So that is why what we will do, we will build insurance, and you'll be able to stake OVN token, which we will issue, or maybe we will let farm. We cannot decide yet. We'll see. But you'll be able to buy and stake this OVN token with some other assets, and that money, so like that stake, will be entitled to insurance premiums. So you come in, you want to insure against negative rebase, you pay some part of the yield for that. And so insurance providers, stakers of OVN token will receive those insurance. But only those who have staked for a long time, who are afraid to lose their investment. So those who are afraid to lose this capital, which is there, will be allowed to vote on strategies, like what gets included, what does not get included. Because our motivation here is to make sure that people have skin in the game, and people are more afraid to lose than they want to gain. And so that's the governance which we will build, and then as soon as it's there, it will be managed like this.
Gotcha. Yeah, that definitely makes sense. Another question is, what is your short and long-term visions and objectives with overnight finance?
I mean, like the vision is, I think, things like USD should not be widespread stablecoins. I believe these are solutions for on-ramp kind of solutions. So the niche for USDT should be much smaller. It should be really kind of regulated entity, making sure there is KYC, there is IML, and when people go off-ramp, so kind of from crypto into fiat, there's nothing dodgy happening. I'm a big believer in decentralization, and so I want USD Plus to be number one decentralized stablecoin, much bigger eventually.
Gotcha. Yeah, it's a nice vision to have. It's lofty goals. It's really good to hear. And then last question I think we'll go with is, how does overnight finance make money? I guess what are your guys' revenue streams, and how are you as the team getting paid?
Yeah, so at the moment we are VC backed. So I mean, we are going to kind of become very big before we start kind of making a lot of money. But our model is very simple. We are going to charge 0 on the TVL. So if we become kind of, if we have 1 billion TVL at some point, then we'll charge like 5 million on that, and that's going to be our rate. We do charge like 4 basis points for mint and 4 basis points for team, so like $4 $10,000. But that doesn't go to us. It goes to USD Plus holders, because it's there kind of to protect from kind of spoofing and stuff like that. It's not the way we make money. But so number one revenue stream is going to be this %, which we're not yet charging because it just would be too small and meaningless at the moment. So we prefer kind of not yet charge for that. Second revenue stream is going to be insurance. Insurance is going to be very interesting revenue stream, because there will be margin built into that, and there's going to be more margin than 0% of the TVL. The third revenue stream, I'm not yet sure. We are experimenting, but it seems that like, maybe I give you some preview, guys, of what we're thinking of. Is these days everybody wants stablecoin yield, but there are a lot of asset classes which can give you very attractive yield, but which are not accessible for USD Plus because there is a risk to lose money on one-day horizons. Slightly more risk, but significantly more return. And in particular, we are thinking about, like there is this USD Plus VMatic pool on Dystopia, And I think it's going to be extremely interesting pool. Because people these days are afraid to invest in thematic. And that's why that pool is going to be disproportionately attractive. So what you can do again, and why we are so bullish on the hedge strategies, you can build a structured kind of USDC based strategy where you can come with your it goes into Aave, we borrow money, and we put it into Matic USD plus pool, and that's kind of rebalanced once a day. So again, this way you get kind of crypto returns, which is kind of the returns from Matic USD plus pool, but your Matic is hedged. It's not fully hedged, and because of the impermanent loss, but it's pretty solidly hedged. And so this becomes quite an interesting strategy, which a lot of kind of very professional players are running, but kind of traditional investors are not doing that. And so we believe we're working on the market for USD Plus, and so there will be opportunity to access those strategies, those products on the USD Plus market, or like USD Plus farm. And for those, we'll charge a fee. I believe such a structured product, which is also kind of regularly kind of rebalanced, and transparent P&L and transparent investments and transparent risks, and again USDC based yield, offering you something like this deserves a fee to be paid. And so on those we'll charge a fee, and that's how we'll make, I believe, quite a bit of money.
Gotcha. Yeah, that definitely makes sense. I think that's about all the questions we had. Is there any other things that we haven't talked about that you'd like to mention?
No, I think I was honestly much. Sorry, maybe I didn't let some people the questions. I apologize. If there is a last question, I would be very happy.
All right.
If not, then guys, I'm really, really glad your project became one of our first pairs, that you chose to be to pair your token with against you. I think big thank you for this, and we like give you an together with Sphere and a few others, how cool it is to keep you to pair your token against USD Plus. So thank you for that.
Yeah, I mean, there might be a little misunderstanding. We don't have a token out quite yet, but we do think that having a pair with USD Plus would definitely be beneficial, whether it be our entire liquidity pool or a portion of it. So there's like arbitrage opportunities between the pools, but I think it's definitely a unique opportunity, and I think you guys are doing some really cool things.
Thank you for this.
Excited.
Thank you, Chris, for inviting me. Thank you, Zach, for inviting me here, and thanks to everyone for this.
Yeah, of course. Thank you, everybody, for tuning in, and yeah, thank you so much for your time. If there's any other ways that you guys think that we can help you out and just really help each other grow, then we're all for it. So,
with pleasure. Yeah.
Yeah, we'll keep in touch.
Awesome.
Take care.
Yeah.